So traders, let's have a look across the markets this week to see what are the most important levels we should be focusing on. This is a bit of this video here is focusing on the stock market, short-term technical analysis only. So you guys that are using fundamentals to try to predict what's likely to happen this week, just don't do it. You're doing yourself a dissatisfaction. All right. And that's not what this is all about. This is short-term technical analysis. Because that's what it's all about, okay? I'm laughing, guys, because it's just like one of the biggest mistakes I continue seeing over the last 20 years, okay, is you're trying to use don't use a fundamental, which is already out, to think it's going to affect the market. Because the market's smart. The market's smarter than you and me, right? If there's a high unemployment or low unemployment or a high inflation number and so on and so forth, and if it's already out, the market has already baked it in. So you can't make a decision moving forward because the market has already baked that in, right? It's like slowing economic data and this and so on and so forth. The market's smarter than you guys, right? So I just want to put that out there before I get into short-term technical analysis here. You can't do that. And remember, guys, one of the biggest things about the stock market is always forward-looking, right? So what happened in the 2008 stock market crash, right? This is the S&P 500. And I really want to bring this to your attention here because I want you to think about this. No one in 2006 and 2007, right, through this period, this is the weekly chart, by the way. This is a weekly chart. I've got some lines through here. And I want to take this off the screen here, okay? So I want you to think about something here when you're trying to look at the markets as a whole. The reason why we can't use, man, I look small today, don't I? I'm trying to come down and get the microphone. Anyway, so let's see this here, all right? Let's see, what have we got here? Okay, cool. So one of the biggest things that I really want to sort of draw your attention here before I get into the short-term patterns and so on and so forth right now is I want to give you the context of the market's always forward-looking, right? So as you know, 2008 was a pretty significant, the big bang, and things really started to heat up in 2008. But what happened prior to 2008? And I want you to think about this. Before anyone started to see the cracks, apart from people that were really intelligent and started seeing in the housing market. Now, as you know, the housing market started to crack back in 2006. Oh my goodness. Housing market cracks. Oh my goodness. This is the biggest bubble of lifetime. It's going to destroy it. I think it's like Michael Burry. Correct me if I'm wrong, guys. Leave a comment in the comment section below. Did Michael Burry start to put on a big short around, was it 2005 he put on a big short? Oh, no, obviously I know that it's not the actual stock market. He put it on the bond market. I'm pretty sure it was anyway. It's been a while since I've actually watched it. But was it 2005? The purpose of what I'm trying to say here, guys, is that even though things may be in the bubble territory, and that's it, the property market's going to crash and it's going to collapse, we don't know when, right? We don't know when. And by the way, as we know, 2008, that's when everything really started to filter through the system, right? Everything, the big bang started to happen, right? But what happened prior to 2008? 2007, by the way, I want you to understand this here. This here, actually, you know what? Do I have a horizontal line? I'll do that, right? So, bam, right? Now let's do this here. I really want you to draw your attention here to think about this as a whole, okay? So that there was start of 2000. Can I copy you and do that sort of stuff? Let's close. Oh, I can't. I just didn't realize it. Anyway, so I want you to think about this here, okay? This here was 2008, okay? And the reason why I'm bringing this to your attention here before I get into technical analysis is this thing here, okay? Is that the market's always forward-looking. So as we know, the banks really started getting in trouble. 2008 was the period of significant, that's when things really started to unwind, right? But as you can see, we spent actually 1 year creating a top first. And that's probably what's going to happen here. If this is going to be the top in the market, it's not going to just create a top and just go straight down. If 2008 was the big bang, right, we can see that it takes time, right? We create higher lows, and then we start to create a bit of a rounding top. We see that my 24 moving average on the weekly charts, we start to go up and we start to roll over, right? So if you're thinking that the top's in right now, okay, because of data that's already out, you really need to humble yourself, right? Because the market's smarter than you and me. The whole collective of the market's much smarter than us. And if you're trying to use the economic data to see that this is, things are overbought and so on and so forth, which by the way, there's actually there's a short-term oversold level right now in the markets. I'll get to that in just a minute, right? Not overbought, but short-term oversold. That's why I'm probably going to see more upside to come. But we start to get this here, okay? So one of the things we see in our mind is that this is going to collapse. And I want you to think about this here. 2008 was what? 365 days. Not one day, not 1 week, not 1 month. So if you're trying to short the market now because of all the reasons, economic data, so on and so forth, by the way, the market's smarter than you, right? And you're trying to short the market, you may be right, but you also may be wrong. And there's a high probability you're going to be wrong, looking for a top once again in a big bull market without getting any evidence that the market's starting to top out, because the market does do that. And that's where technical analysis is king, right? Technical analysis is king because the market does start to create tops, and then we start to go from a lower low, lower high. Look at this here. This here was 2008 and a lower high. And then we had the big drop, okay? So I really wanted to bring that to your attention from there, is that the data that's coming out and already has come out, the market's already baked it in the charts. It's already baked in the charts, already baked in the market. And so, by the way, you're too late. Even when it does come out, short-term shake and bake, but you're too late, okay? So, just the purpose I'm trying to say there, guys, is I think a lot of people try to be smart with these markets. And what I mean by smart is they're trying to put these pieces together. Well, if they see this and they see this and the data and what Trump said and Powell said and Tom Lee came on and said this. Stop, right? Well, once again, remember I said before about the moving average, right? We want to keep it simple. What happened in 2008 with the moving average on this chart? We started flattening out. What happened here, even on the top here, before we started going into this thing here? We started flattening out the moving average, right? So when we start to get the flattening of moving average, now you have some reasons why. And I've just went back to the periods of down phases, and you see what we see on the charts. And the purpose of I'm saying that here is, if I take everything off the screen here, is this moving average here right now looking anything like this here? And if the answer is no, which it is, the trend is still up. But John, it's overbought. Your reasonings wise, it doesn't matter, right? Remember, in a very big bull market, and we're probably in a very big AI blow-off bull market right now, which we are, it can go up a lot higher and a lot more than your wallet can handle, right, for the stock market. So, with all that being said for you guys, I hope that sort of helps you out. I think a lot of people, they're trying to be smart, okay? For you guys that are new to trading, I really want to give you 20 years of experience. The way you trade these markets is not doing the fundamental stuff. You can't trade a fundamental because, has that already impacted? Has it not impacted? It's like when is it going to impact? It's right? There's no probability based off that. Remember, the reason why I'm doing really well, and again, if you want to see my equity curve and what I'm all about, getjohnshelp.com. I show you my equity curve for all of the last 12 months, or all of 2024, should I say? That's what the equity curve is there. But the whole thing and purpose of me saying this is for you to actually have a probability of actually doing a lot of the markets. We can't trade based off hope, right? We don't want to have a hope-mania across these markets. We want to have a probability. And I know, and put it this way, guys, I know the way that I trade, I'm going to make money every year for the rest of my life from these markets. Why? Because I have a trading system, a trading setup that I look for, and I trade that. When I trade that, most of the time I do really well. And especially if I get one of my amazing trades, then I start to do really well over the course of a couple months. Okay, so that's what we want to go down through that path from there. And probably maybe 2% of you guys are going to really click with this, and the rest are just going to say, "You're an idiot, John. Show me the quick tip. I'm looking for the quick tip. I'm looking for that idea to make $1 million today." You're an idiot. You're a moron, and you're not going to last in these markets. Okay, because these markets don't like lazy asses. And what is that, right? And again, if you want to be part of Success Leaves Clues, right? I'm trying to share this with you to get you started for this week and so on and so forth. Success Leaves Clues. And the number one thing is, guys, I have a trading pattern, a trading setup. when I go to the market. Now, I'm going to give you technical analysis right now, short-term technical analysis across the markets. But for trading successfully, when I trade the markets, I don't trade based off the technical analysis I give you today. No. You're probably thinking, what are you doing technical? This is just to give you an update of what's happening in markets, right? But how do I trade? Oh, I have my trading setup. And then I go to the market looking for my trading setup. See, there's a big differences there. Most amateurs, and I would say probably 80% of you guys right now, especially probably more than you guys are losing a lot of money this year because you're getting chewed up in these markets because you're going to the market right now. And you're going to the market in a way where you don't have any sort of system. You're just looking to see what feels right, what looks good. And then what happens is you're taking all these different trades, and then before you know it, there's 10 trades and none of them look like each other. If I showed you my last 20 trades that I've taken, all of them look almost identical to each other. With that being said, let's get into the actual short-term technical analysis stuff here. So on a short-term TA, guys, very strong bull market. Don't try to short this bull market, right? Don't try to short it, right? You're going to get run over. Throw your ego at the window. The market's always right. The trend is your friend until the end. You know that. So just go with it. The trend is still up. The moving average is still turning to the upside. We're creating higher lows. Just go with that. And so this whole short-term moving average here, let's go to the daily charts now. If we do get a little short-term drop, we're probably going to come down towards this level down to here somewhere. So a bit of a short-term drop through here. And then I actually see this thing actually getting a bit of a bounce. Now, why do I say that? Because if I go to my fear and greed, this is the fear and greed index here. Hey, where'd it go? Here. This is the fear and greed index. And the fear and greed index, there's a lot of extreme fear in the markets, right? Or there's a lot of the indicators that create this fear and greed index. Now, by the way, this fear and greed index gives you a bit of a short-term view of what's happening. And when people are fearful, be greedy, right? And again, I just looked at this today. You see this as fear. If we get any more downside, so if I go to the charts here, if we get any more downside, guess what's going to happen to this fear, which is already at fear? We're going to start to ping to extreme fear. And what happens when there's extreme fear in the markets? Does the market crash? Now, if you've been trading the markets less than 5 years, you would say, yes. Oh, yeah, that's it. So much fear, the market's going to crash. Well, then you know, right? It's like when people are fearful, be greedy. And if you just look through history, that's when the time to start to get greedy, right? Now, by the way, I'm already starting to get greedy on the bullish side, and I didn't know this until I just showed you this here. But anyway, the purpose of what I'm saying here is that I'm showing you all these evidence of why if you're trying to call a top in the stock market right now, you have a 90% chance of getting run over, right? The trend's up long term. The moving average is up to the upside. The fear and greed index is extreme to peer. And every time we do get that, look at this here. Extreme fear. Isolator. Extreme fear. Fear. The only one is the put and call options. We're still pretty greedy down through here. We're not really at a massive extreme. We're still pretty great there. Neutral here. Safe havens, extreme fear. Oh, look at this here, right? The safe havens have actually just... Wow. This actually hasn't happened in a long time. And the last time we got this extreme fear was down through here, and then we pop back up. So look at this here. Absolute extreme fear from there, and so on and so forth. So, with that being said, guys, there's extreme fear coming into place. The fear and greed index is a bit more short-term sort of barometer. So expect more upside to come real soon. The trend is your friend until the end. A little short-term drop. Don't be freaked by that. Okay, let's go look at the Nasdaq. So the Nasdaq, the line that I'm watching for with the Nasdaq is, there's this one here. So if we do get a bit of a drop here, but then also let me go to here to here. No, I don't want you. Let me see if I can clone you, and then let's see if I can. There may be something going on through there. The trend is still up, higher lows, moving average is still up. Are we getting at least a flattening of the moving averages? No, well, the top's not in. So I don't care what you think. Trade what you see, not what you think, hope, or fear. Trade what you see, not what you think, not what you hope, or what you fear. Because the only thing we can do is trade with what we see. And so probably from there, right? Ooh. Okay. So there's definitely a touch point there, definitely touch point through there, touch point through there. All right, so there's a bit of a lot of touch points through here. And then we have this level through here. So, man, the extreme fear could be getting ready for, if we hold here and break out, this could just be a little short-term shake and bake. Freak you guys out. Get your amateurs, get the amateurs of the markets thinking the top's in because it's the double top, and here we go. And there's divergence on stochastics and MACDs and all that sort of stuff. No. Trend is your friend until the end. Right? And then let's go to the Dow Jones. Let's go have a look at the Dow Jones. So the Dow Jones, again, strong trend. Here we go, guys. Low, high, low, high, low. Again, I'm not smarter than the markets. You're not smarter than the markets. Stop trying to be smarter than the markets. If you try to make money from the markets, look at what the market's doing and go with it. Because the big boys make these patterns. The big boys push these markets around. And if the big boys are telling you something, listen to them. AKA, the higher lows are still up and the moving average is still up. So we have trend and we have this flow to the upside. The big boys are still pushing it to the upside. Right? Don't fight it. I'm really harping on that, guys, because I'm just saying, so many people that I see, so many people lose so much money from just doing what I'm doing here, right? They make life hard for themselves. Anyway, so we get this little drop to the downside. We may get a little bit more downside come, but man, if this here actually, yeah. If we get a little bit more downside to come, that's going to be a really good level of support and resistance, right? Because look at this level through, look at that level through there. Look at all this level through here. So if we get one more downside to come through here, guess what's coming? Oh, bit of a slingshot move right back to the upside. And then let's go look at the Russell. And the Russell is actually the weakest. Now, I am surprised by this, by the way, because last year I was saying King Russell, and people gave me shit for that. John, you got it wrong, blah, blah, blah. I hope you guys are realizing that whenever I do these updates, again, I don't trade based off this update here. I'm not going to I'm not placing a trade based on this update here. I'm just doing technical analysis for you guys. There's a difference between doing technical analysis and having a trading setup. I trade my trading setup because I know I have a high probability, okay? John, you got it wrong. Get a day job. Right? So, but the Russell is the weakest one out of the whole lot of them. It just really has been struggling. So the only thing that I can see with the Russell, if I'm going to do any sort of line through here, would be this level through there today. We definitely have a lot of resistance up through here. Up through there. Yeah, this is interesting, eh? Interesting. I'm just looking at this level through here. Let me see if I can sync you in layout. Yeah, so again, the Russell is the hardest one out of the whole lot, because the Russell is, yeah, it's not giving me as strong, right? The trend isn't until the end, right? But this is starting to almost start to flatten out through. So the Russell is the weakest one out of the whole lot there. So anyway, traders, that's it for me today. There's an update for you. Remember, guys, trade with the trend. Be smart. Remember, when there's extreme fear, which it is right now on this fear and greed index, when things start to get the fear into extreme fear, we tend to get, and this is for short term, right? We tend to get swings, because when there's fear in the marketplace, that's the time to be greedy.